Good morning, traders. This is Brad Matheny. Today is the 4th of February, Sunday, bright and early in the morning. Hope you're all doing well. We're going to go over some basics regarding the speculative phase peak pattern and go over the investor top-down video. Now, as you're well aware, many of the major indexes have already started to reach new all-time highs, and this is primarily because of the FANGs stocks, or what others are calling the Magnificent Seven. We're seeing a huge rally in technology. I'm actually calling it the dot-com do-over, but either way, what we're seeing is a massive rally. Now, what I wanted to do is show you the speculative phase peak pattern and how it works. It works in both bearish and bullish markets, and it is very clean. So understand, I'm going to come over here and I'm going to draw it. In a bullish trend, it's got to come up to a peak, roll down, form a flagging formation that does not breach this upper level, then rolls downward below the flagging low here, and continues downward to establish support. Then it waffles around a bit, and then eventually breaks that support level and moves down to an ultimate low. So here's the secondary support. Now, the way this works is we have the A setup, the B flagging, the C breakdown of the flag, the D support level, and then the E ultimate base and bottom. So those are the setups. So basically this is a, no thanks. This is a new high. This is a flag formation. This is a breakdown of the flag. This is new support. And then this is finally the breakdown to ultimate low. So this is basically the formation, and it works in an invert. Now, understand that, and I'm going to draw this here, understand that this area can continue to move upward, invalidating the trigger. This area can continue to move upward, invalidating the trigger, and this ultimate low will eventually turn into an upward trend. So when we get this peak and this roll down, which is a very common structure for the setup, in fact, let me come here, change this to blue. This is the initial setup you're looking for: a rally to a new high, a pullback, and then a flagging formation that sets up over here. Now let's go through some examples so you can see what I'm talking about. So here we have a weekly SSO chart. I wanted to start with something that provided very clear transitioning. And what we're going to do, we'll shrink it down a little bit, and these occur over and over again, okay? So here we have a rally to a new high, a pullback, a flagging formation, a breakdown that did not take out the low, so it reverted back to the upside, finding support, rallied up to a new high, brief little flag, took off, rallied higher, came up here, pulled back, broad flagging, continued to rally higher, pull back, broad flagging, rallied higher, pull back, broad flagging, breakdown, finding support, waffling around, move down to the ultimate low. So this is a perfect A, B, C, finding support across here, waffling around in this D area, and then moving to the ultimate low here. So now as we move forward, here we have another flag, came down, did not break the low of the flag, found support, rallied higher, whoops, came over here, flag down, came back up, rallied up above this high, took out, and we're now moving to the upside. So these speculative phase peak patterns work in the inverse as well. Okay, so you can see here that, you know, we have this formation down here coming all the way down to a low. Let's just draw the bigger one, and then come over here to this flag and coming back down here. So here we have the downward type of structure, breaking down, moving above our resistance level right here, moving into the flagging formation, which is the, again, imagine you're just inverting this. We've had the flag right here, there's the flag, here's the flag, breaking down to a new support. Okay, there we go, new resistance, waffling around, running to an ultimate low, in this case running to an ultimate high. So what's happening here is we've had this clear breakout, we're running to a high. So now we need to pay attention to this, because like I said, the structure for this pattern is confirming that we're rallying to an exhaustion high. And that's very good for traders, but also presents a bit of a warning. When we take a look at where I believe the wave ends, and we take a look at this, we're moving up above the 1.0 level right now, meaning that we're exceeding the wave C structure. We're moving into this area where we could be finding a top or resistance very, very clearly. So let's move back to the SPY, and I've drawn this topping formation here. Again, this is a great example of price structure, and you can see here we are moving up. We're above 1.0. We're likely going to try to move above 500, moving possibly up into the 513, 520 area. And that would be, in my opinion, as I've drawn here, a very solid resistance area. So we have a very clean upward move based on the speculative phase peak pattern. We are in a late phase expansion. Okay, I would not be chasing this too heavily. And we need to be very aware of the fact that we are going to set up at some point up here, ladies and gentlemen, we are going to set up a new speculative phase peak pattern somewhere out in this area. So we're going to have a bit of a rally, maybe 4 or 5 weeks, maybe less, maybe a bit longer, but we're very clearly moving to the upside right now. As I've been mentioning to you, I don't trust this rally. I think this rally is going to be short-lived. The indicators, my custom indexes, are showing that it's running on fumes, driven primarily by the technology stocks. We're seeing a lot of increase in delinquencies and banking issues. I think we're going to be moving into a broad correction in February, March, April, so be aware. In the meantime, we are clear for a bit of a liftoff. Maybe from where we're at right now, if I do the simple math, maybe about a 4.5% to 5% upside move from where we're at right now. I would urge you to be very cautious of this. Again, the news could suddenly change. Okay, let's go over here. I don't want to waste too much of your time. We are still in a bearish trend with the accumulation phase index. Remember, this is an exhaustion rally. The consumer engagement index collapsed last month, finding a little bit of support here. We'll see how this plays out as we get deeper into February. The market rotation index is stalling back out again, came back pretty hard. I do expect it to come back down here. maybe waffling around towards the election a little bit sideways. The fear index has moved up a little bit, 5.79. The sentiment index is slowly but surely climbing, which means we have still some bullish momentum in this trend. You can thank the FANGs and the Magnificent Seven for this rally right now. U.S. Valuation Trends Index is stalling out. You can see here we have this Fibonacci price amplitude arc that's setting up here in March and April. That means March and April will probably be very volatile. We'll see what happens. Custom U.S. Leading Index is stalling back out near this double topping formation. Really not seeing any big, let's call it underlying follow through to the upside. The FANGs Index shot straight up again. This is where you're getting all your momentum, guys. This rally in the stock market, the U.S. stock market, is a technology, a dot-com do-over. This is going to push these things up to untenable PE ratios. And I expect that there's going to be a sudden collapse at some point, indicating that, hey, what the hell, we're 50, 60, 70 times earnings, and that's pushing us, 6, 7 years of earnings are priced into this thing. We'll see what happens, but this is really what is driving the stock market right now. The NASDAQ and the SPY have just briefly crossed above this level, so I need you to understand that this is a bigger, broader flagging formation here for a speculative phase peak. This new break out to the upside and here is indicating we could have a moderately sustained upside rally. Okay, I'm guessing at least 3 to 5 weeks, potentially maybe 3 to 5 months. We'll see what happens. Base trend index is showing fairly strong demand for U.S. dollar based assets. Again, speculative phase peak pattern. You've got multiple patterns setting up here. You've got this one flagging higher, then you've got this one flagging up, hasn't really broken down yet, breaching new highs. So you're getting very good confirmation to the upside, which is very important. But again, how far will it go? We'll see. We will really see. Right now, you can become a little more confident in the upside trending, given the fact that we've now cleared this level, and we've cleared this historic all-time high just last week, and we're going to see some upward trending, I believe. The SPY cycle patterns indicate a crush in trending mode. I would suggest that would be a big pullback on Monday, possibly gap potential, gap reversal, and counter trend mode. These could be bullish trending, gap breakaway, bullish trending, and then breakaway, bullish trending. We are still back in explosive move. We have a momentum rally, gap up lower, top, which indicates we find resistance, flat down, then a momentum rally. So we're getting into that, struggling to attempt to move higher. But again, the price patterns and the indicators and the trends are showing that we're running on fairly strong Magnificent Seven momentum, but the underlines just don't support this big rally yet. So, like I said, this is kind of like, the best advice I could give you basically is it's probably going to go up based on FANGs and the Magnificent Seven. But understand that there are some fundamentals that are saying we could see some sharp pullbacks. So pay attention to the fact that these new highs in this rally could come to a sudden end. So be aware of that. Okay, Smart Money Index is moving back into trending, supports the breakaway of the speculative phase peak pattern to the upside. We could see trending last another, 5, 6, 7, 8, 9 weeks. Don't know. We'll keep an eye on it. But we are getting very clear trending to the upside right now. MENT rotational modeling system reached another new all-time high. We're just literally about 40,000, just under 40,000 away from 2 million. We'll see how this plays out. Again, the SPY will likely break the 500, maybe getting to 508, 513, trying to reach some new high before stalling, maybe a bit higher. No change in the sector mapping. No change in the primary allocation. I was going to change this, because the very low settings for stocks, we do have a bit more of a solid uptrend in place. You can increase the stock allocations to 20-25%, maybe a bit more. Like I said, I'm just warning you that the underlines are still showing moderate weakness. So this is not a broad-based rally. This is a very specific tech sector rally. And because of that, like I said, I think we could be looking at a dot-com do-over, meaning once we hit the peak, once the realization comes into play, it could roll very sharply to the downside. Okay, general market index is still at 83. MENT volatility is 19.63, bullish and falling. Again, very toppy, but still very bullish. Smart money index is trending. We just went through that. US to global index is rising. Stock market valuation index is stalling. Fear index is 5.79 and rising. And US sentiment index is rising. We're getting very good overall momentum trends to the upside. Very clear breakouts of the speculative phase peak pattern, and even confirmation of the inverted bearish speculative phase peak now rallying to an ultimate high. So be aware that that's the phase that we're in. We are rallying to an ultimate high right now, and that trend could continue for many weeks or many months. Here's the MENT rotational modeling system pushing up just about $38,000 away from new all-time highs. We've had a very good start to the year so far. We get above 2 million. I'd like to see it. I'd like to see it keep that, but we'll see how it plays out this year. We might get a pretty good trend this year. Okay, stock allocation for 401k is still 85%. Bonds are 10%. Cash is 5%. We're climbing up again on the comparison between the MENT rotational modeling system and the SPY, nearing new all-time highs. This is a difference between the performance of the SPY and the MENT rotational modeling system. Custom U.S. stock market index is rallying back up near this double tap, triple top, double tap again. So I do, again, expect some resistance at this level. And again, I wouldn't urge you to try to pick shorts or pick tops right now. This is not the way to do it. We're in a rally to an ultimate peak. We've broken above this level. We're back in this middle channel area. We could see a rally up into this area or higher. We need to see what happens. I'll move this next week. We haven't cleared this area yet, so we could very easily come back up into this 1325, 1330 area and roll downward. That would be, again, about a 4 or 5% increase in the U.S. stock market before we find a peak. The custom volatility index, you can see almost the same type of speculative phase peak pattern right here. We're rolling into that flagging formation. Let's see what happens. Still very bullish, still toppy. We need to kind of see what happens here. I would urge you to, like I said, you know, think of this as, you know, what's the catch? That's, in fact, maybe that's what I'll type in as the title of the video. What's the catch? The catch is that we're in what seems to be a moderate momentum phase rallying to a new ultimate high. The catch is that this could suddenly end moving downward very quickly, very sharply, which means I would urge you at this point, with only a 4 or 5% upside target range before we reach the 1.50 Fibonacci extension, I would urge you to stay very cautious of this rally. You know, for example, short-term options, maybe a couple of quick plays, grab your profits, call it good, and realize that this is, right now, probably one of the most dangerous market trends I have seen, because this is setting up to become an extended bull trap, given what I see in the patterns and the setup. So, again, we could rally. I'll give you another example here. So here's the leading index. We have the highs back over here. We could rally up into this 280 level on this really vapor thin momentum rally, pretty much driven by technology, sucking the markets, the NASDAQ and the SPY and others moving higher, into a big bull trap, a big dramatic rollover that could be very disastrous. And again, at that point, people will be like, oh, it'll keep going up, let's just buy more, whatever. I don't believe that's going to be the case. And again, watch this. Where is it? Right here. Mid-cap, weekly, bearish. Mid-caps tend to be a pretty good early warning. Same thing with transportation is a pretty good early warning of markets having strength and or weakness. If we suddenly see the mid-cap or the transportation moving downward and or retail and financials moving downward on weekly, you're going to probably have to understand that the markets are losing momentum very quickly. Okay, so summary, we're in a breakaway rally to a new ultimate high. This is confirmed with multiple indicators, including multiple algorithms. My warning is it's running on fumes. It has a catch. The catch is it could end very quickly. We only have about 4.5 to 5.5% to the upside before I think we're going to run into a top, potentially. So again, the best advice I could have for you is do not chase this top. Look for short-term, decent long side plays and wait for this thing to play out. We might be looking more along the lines of a, mid to late March top in the market. We'll see how it goes. And remember, the top for the market is probably going to be right in this 513 to 528 area on the SPY. Okay, guys, that's it. Talk to you later.